In business today, three things to know. First, immigration deliberation. The president is expected to announce his plans this week. What will they be? Will Republicans have a meltdown over them? And will business side with the administration? Then, OPEC, family feud.
Survey said
The oil cartel is fighting an internal battle on whether to cut production to stop the slide in prices. And in the corner office, a woman who says it's not only okay to be plus size, but that it's a winning business model for fashion. Arise Exchange starts now. Hello, everyone. I'm Andrew Schmertz. See you next month is the message from the U.S. Federal Reserve on Wednesday. The monthly minutes of the Fed released this afternoon, and they contain exactly no new news. The Fed remains concerned about low inflation, meaning no higher interest rates for now. We'll talk more about in a moment about the minutes with Michael Lear. He's Vice President of Portfolio Management at Athena Capital Advisors in a few moments. But first, we begin with immigration. President Obama could announce his new policy tomorrow, and Republicans in Congress have vowed to fight him, quote, tooth and nail. Arise, senior Washington correspondent Colin Campbell joins us now with Washington, D.C. Colin, what do you expect from the president tomorrow?
Well, the president's going to be outlining what he plans to do without the help from Congress in trying to activate immigration reform. Now, this will probably focus on two major things. One is trying to restrict deportations for those who participate in high-skilled labor in the United States. The other would be to restrict the deportations of men and women who have children in the country, who are born in this country, although it's not a done deal. It's not a guarantee just because they have children born here that they won't be deported. It's just that it will be restricted. They'll have to go through due process in order to do that. This will include up to about 5 million undocumented immigrants here in the United States. And of course, that's causing some uproar from Republicans who believe that the president is exceeding his legal authority. But the president of the White House and Department of Homeland Security Secretary Jay Johnson said that they have been working on this for a while, looking at different avenues that the administration could take if Congress fails to enact some type of legislation for immigration reform.
In the past, Republicans have said that in the past, Mr. Obama himself has said that he didn't have the legal authority. So first, what has changed there? And second, what measures can the Republicans really take, even when they control both houses next year?
Well, right now, let's start with the first thing. They have looked at various methods to protect the undocumented immigrants. Now, there are some things that executive action will not do, and that will that includes not eliminating deportations altogether. This will still happen. This is also something that will include securing the border. I think this is something that's still within the president's legal authority to do. So these executive actions will be somewhat limited. This isn't going to be some wide sweeping action that the Obama administration is going to be able to do, but it's going to be very precise. And I think this is one of the major things that the Obama administration has been working on, especially since we have heard the threats of lawsuits from Republicans at the same time. And Andrew, say your second question again one more time.
Well, basically, what can the Republicans do to stop this? Because they say, quote, they're going to fight it tooth and nail. You mentioned a lawsuit, for example, as one step, but they do have some other tools in the toolkit if they want it.
Well, they have threatened also government shutdowns and defunding the president's funding bill, but I don't think this is really going to happen. These are threats, and they're really now coming from the fringe parts of the Republican Party and the fringe conservatives. Mitch McConnell, who's going to be the Senate Majority Leader next year, said that he doesn't believe that he's going to try to shut the government down. I don't really think that Republicans in a large way believe that this would be a constructive measure for them to enact, simply because Americans responded to it so negatively the last time. This executive action at the same time also allows Republicans to still legislate and come up with a plan down the road. Even though this may be enacted, it still allows there to be some legislation that is a lot more comprehensive and will take care of a lot more issues that immigration reform needs.
Okay, Colin Campbell in Washington, D.C., thank you so much.
You're welcome.
Well, following the Fed's announcement, the markets retreated after a record day yesterday. Let's take a look at the final numbers. The Dow closed. There we go. Right on cue. It closed down 209 to 17,685 points. It was down as much as 40 points earlier in the day. The S&P 500 down 3 and change, and the NASDAQ in the red as well. Corporate earnings season continues. And here are some companies that we're taking a look at today. Target reporting that same-store sales increased for the first time in a year. Target's EPS for the third quarter of 55 cents did beat estimates. Staples saying that it increased demand for paper and ink products pushed sales above expectations. It also announced plans to close a total of 170 stores in an effort to boost profit margins. Third quarter EPS, talk about financial engineering, of 37 cents was in line with estimates. And Lowe's Home Improvement has raised its fiscal year profit outlook after a recovering job market helped third quarter sales. EPS of 59 cents. That was a penny better than expected. And a look at commodities. Gold down 15.60 and oil down again 19 cents to 74.42. We'll talk about oil in just a moment. Construction on single-family homes, which account for more than 2/3 of the market, rose by 4.2% to 696,000. That's the highest level since last November. The Fed released minutes from its October meeting in which the Fed announced that the end of quantitative easing. Were there any surprises in the minutes? Let's ask Michael Lear. He's Vice President of Portfolio Management at Athena Capital Advisors. Michael, welcome to Arise Exchange. Thank you for coming.
Nice to meet you, Andrew.
Okay, so you go through all of these Fed minutes. I don't know if the minutes are available on iTunes for everybody to download and read, because I'm sure they would be a big hit. What did they say, and any surprises?
They said nothing, and essentially, they spent a lot of time parsing their words, deciding whether they were going to use the considerable time language, or whether they were going to, switch the language, or what are they going to do for the next meeting. So really, they spent a lot of time, as far as what I read, is they spent a lot of time doing nothing. And the one concern that they did have is the competing effects of an improving labor market versus a lot of what you're seeing with the dollar. So the rising dollars creating lower inflation. So this deflationary scenario is converse to what they're expecting to do in terms of raising rates.
And that's because the dollar has better buying power.
Yeah, so it allows you to
prices don't go up.
Exactly.
Okay, so we did see a little bit of inflation with the producer price index. It's only one little measure, one little time frame. Why does the Fed continue to worry about the lack of inflation here, and why aren't we getting an inflation? We're now 6 years into this supposed recovery.
Well, it's a great question, and I think largely the inflation just hasn't been there. You haven't seen inflation in wages. Makes it harder for people out there in the working place to go out and spend. The job market's improved, but you see there's slack in certain areas of the market. People don't have the necessary skills to fill the void. So you're seeing a lot of these competing effects, and so the Fed has 3 different things that they're looking at, but inflation being one of them, and they haven't seen the rise in inflation. So it kind of begs the question of when do they raise rates?
Well, that's right. With the rise of inflation, they would raise rates. There are hawks, of course, on the Fed that say you need to get ahead of this now. Is there growing anxiety, do you think, among the Fed that we're going to wake up one day and see surprise inflation and that they've fallen behind?
No, because if you look at the break-even rates for TIPS, which is one of the measures that the Fed uses.
Walk through the TIPS, what that is.
Treasury inflation-protected securities. So what that is a measure of you take U.S. Treasuries, which don't have the inflation protection, you add on the inflation protection, figure out where that break-even rate is. So what the Fed is looking for is a more stable break-even rate. And so that rate has come down and has fluctuated a bit, but not to any extent where you'd be excessively worried about it.
The Fed will meet again, and then will issue minutes again in December before they go away for the holiday. What do you think we're going to see in December? Will they have any clearer language? And when we say clearer language, they never actually tell you what they're thinking, but they may use new words.
Yeah, exactly as you pointed out. I mean, they might use slightly different language, but I think that the target's still there for rising rates over the mid to end of 2015. So that's generally what we have our eye on. And so I think what that means for investors is that in a rising rate environment, you've got to be careful about how you've allocated your bond portfolio. And so what that means to me...
Are you advising people to make a cyclical change right now into bonds, or a little early?
No, way early for that.
Yeah.
So we've been underweight bonds in terms of our portfolio, but what you want to do in terms of protecting yourself against rising rates is to have a diversified investment structure. So for our clients, what that means is they're going to have a large allocation to municipal bonds, which are tax exempt. So for high earners, that's fairly important. And then, some things that a lot of clients outside of our firm generally don't have is access to global bonds, our international bonds, our emerging market bonds. And those are a good area to be.
Let me ask you about emerging market bonds. You like those?
Yeah, we like the emerging
where?
market and global bond story. We like Pacific Asia region because that's where you're seeing a lot of the growth. So if you look at what the IMF in terms of their growth rates, emerging markets as a whole, they're projecting 4.4% growth out to, I believe, 2017 or so. But if you look at the Asia Pacific region specifically, they're looking at closer to 6.5% growth.
I ask about emerging markets because we would like to talk about that on the show, and we certainly have you back to talk more about that. Then just to wrap this up, for the rest of the year, as far as the equity markets go, no surprises, you think?
Surprise. So for market participants like me, we've seen a lack of volatility through most of the year. So you had, I think, 50 to 55 days without that move back in the. So what you saw last month was a bunch of 1% moves. So so that was surprising to some, not so much to us. We think there will be a little volatility, but for the most part, unless there's something substantive that comes out through one of the economic releases, we'd use those opportunities to add to equities.
Okay, Michael Lear, terrific. Thank you. We'll have you back on soon. Appreciate it. Right. Coming up, oil fight, this time within OPEC. You're watching Arise Exchange. Stay with us.
It would be for the people, by the people. It would be very diverse. It would be with every culture you can think of.
Within the continents and the countries around.
That I would be more looking towards young people.
If I were to build my own news network, old, young, fresh, hip, classic.
If I was to build my own news network, I would people who from all over who are very connected and diverse.
If I was to build a network, I would love, of course, every country, every location, every city. I mean, it's kind of unrealistic, but how cool would it be the first country, the impossible?
Informative. The U.S. economy is on the right path, and the wizard of the Fed is leading the way.
We started our companies originally to create something that made a positive difference.
Compelling.
I became very successful, not allowing myself to be average.
Our favorite person of the day, when we pick one person who grabbed our attention, and not for the right reason. Yeah, he sort of lost all business. Investors came back from the long weekend, tanned, rested, and ready to buy stocks. Entertaining Money Daily, Arise Exchange. Welcome back to Arise Exchange. It seems OPEC is divided over the response to falling oil prices. The split emerged among the 12-member group after Saudi Arabia cut its oil production sharply last month, while others leading members to raise their output. What can we expect as the pressure mounts ahead of OPEC's meeting in Vienna next week? Joining us with some insight is Dan Dicker. He is the author of Oil's to Arise Exchange. You are a guest, of course, here on Arise America before, so we welcome you back to the network. The first big headline here is, does OPEC want prices to continue to fall in what is becoming a more competitive oil market?
Well, I think you're right. There is a split. There is a dichotomy between members of OPEC. There are some that need a much higher price of oil in order to balance their budgets. Specifically, that would be Iran and Venezuela, and they are the ones who have been screaming, crying for a production cut going into this November meeting. On the other hand, the Saudis have a much lower margin level for their budget, and therefore they can sustain lower oil prices for a longer period of time. They'd be, I think, a little more easily, they'd be able to take a lower price of oil for longer.
The Saudis want to continue production as is, from what I understand, right?
They haven't really adjusted production too much in the last 3 years since 2010, since when they were asked to, in fact, raise production by the Americans to offset some Libyan production during that civil war.
Okay, so now where do they face competition these days? They face it from the United States, right?
Entirely. I mean, that's really where the major competition is starting. We've gone from basically, well, not zero, but close to zero in shale fracking to almost 5 million barrels a day of shale fracking, and that's to add to other sources of U.S. oil. Now we're producing 9 million barrels of oil a day. That makes us truly Saudi American to a large degree. We've become one of the largest oil producers producers in the world.
And so overall, that is, we're still, if you go back 10 years, prices are still high, right, in some relative terms.
Well, I think in relative terms, it's actually not so high anymore because of inflation and so forth, that a $75 barrel of oil is really equivalent to something closer to the 50s, going back even 10 years ago.
Do you think you see right now oil continuing to fall right now?
I don't see, the problem is that despite the fact that it's unsustainable, and by unsustainable I mean that there are a lot of oil companies that cannot afford to take it out of the ground at this price. There's really
and
not...
and that by nature, then, forget the cartel, the market forces itself will cut production.
Well, it will, but it will take time because most of these oil companies will want to be the last ones to cut production. They will use whatever financing tricks they have in their book to maintain production. Otherwise, obviously, they have to sell assets at fire sales and they can go out of business themselves. So there's going to be a lag period with prices being down here before those production cuts are realized. We've actually been increasing production here in the United States, sort of looking in the rearview mirror of when oil prices were at $100 a barrel.
I want to talk more about how the U.S. is producing oil and where are we as far as getting to the point where we're going to start exporting?
Well, there's a big question in Washington on whether we should export oil. You've got to remember that argument is made by oil companies in order to gain the premium that global crude has comparative to U.S. crude. Now, if you take, I don't want to get too deep in the weeds, but American crude is benchmarked something called WTI, West Texas Intermediate. Right. That runs $5 a barrel about to the European benchmark, which is Brent. And you should know that most of the crude oil that's being made in the Permian and being made in the Bakken runs at a $5 to a $15 discount to WTI. So, in fact, a lot of these oil companies are working under a $15 to $25 discount to global crude, and that's really why they want to see an export market change.
The fact is OPEC nations have fought many times before among themselves on what prices have. What holds them together is oil. Other than that, these countries all have the various other political issues going on. Is this a serious threat to the cartel, do you think?
I don't think so, although many analysts have written that this may be, in fact, the death knell of OPEC, that this fight will be enough to break the cartel. I don't see that. In the end, the cartel, every individual only has strength in terms of the strength of the cartel. So even though there's a lot of infighting for, as you say, a lot of political reasons, in the end, I believe the cartel will hold itself together.
I'm wondering, with the U.S. pumping so much oil, if they can pick off some of the OPEC countries, if they can, do we have any interest in stepping in there and trying to break up the cartel?
I don't like to bet against, for example, a sovereign nation pumping oil as opposed to a private oil company who has shareholders to answer to pumping oil. Usually the sovereign nations can withstand the prices a lot longer using central banks than the shareholders are willing to on the other side. So I think in the end, the losers here will be the U.S. oil companies.
That's interesting. Dan Dicker, thank you so much.
Thank you.
Thank you for stopping by. Time now for our business ticker stories making headlines across the nation and the world. Takata is now under pressure to expand its airbag recall. The National Highway Traffic Safety Administration says an incident in North Carolina, a state that is not currently under the recall, proves that a national effort is needed. 8 million vehicles have been recalled in the U.S. alone due to faulty airbags. A drone decision. The National Transportation Safety Board upholding a ruling today, which gives the Federal Aviation Administration authority to regulate civilian drones. This preempts and overturns a decision in early March, which said the FAA did not have the legal authority over unmanned aircraft. Drone use is up, and sightings near airports have officials alarmed. Apple's new encryption technology irks the feds. Apple says its encryption technology means that it's unable to retrieve data from locked iPhones. The federal government says this will aid criminals. Apple, Google, and others say regaining customer trust is a priority on the heels of the NSA data leaks. JetBlue is reversing policy. The low-cost carrier introduces new pricing tiers and a bag check fee to its cheapest tickets. JetBlue is also shortening legroom to add seats. The airline expects an extra $400 million in revenue annually from these changes. Analysts say the low-cost airline has made a decision to appease Wall Street over its once classy brand image. And if you're walking through Times Square, look up. It'd be hard to ignore. The world's largest digital billboard opens for business. The 8-story billboard in New York is equivalent to the size of a football field, and it costs a pretty penny to rent. Google has spent $2.5 million to rent the billboard for 1 month, starting next week. Coming up, what happens when you try to drunkenly pay using bubble gum? Our favorite person of the day is next. Stay with us.
There is a reason Africa is called the new frontier. What was once potential is now an opportunity ready to be seized. Once revered for our resources, today's wealth lies in our people. People who build the cities that shape the future. People who know an idea in one place means business in another. A generation for whom technology means there are no borders, no boundaries. We are the new lions in a brave new world, kings of the urban jungle. And there's a bank that puts the world in our pocket and the future in our hands. UBA, Africa's global bank.
Unrest continues in Ferguson, Missouri. Exactly what happened to Michael Brown Jr.'s memorial. The NFL fallout continues. Why does this video change the game? President Barack Obama met with congressional leaders today.
He does not need congressional approval to carry out the strikes.
The only language understood by killers like this is the language of force.
Do I want to have a draft? No, because I don't want to have war.
Hello and welcome to Arise America. I'm Debbie Turner-Bell.
Time now for our favorite person of the day, when we pick one person who grabbed our attention and not for the right reasons. Today, it is Jacksonville Jaguars cornerback Dwayne Gratz, who is denying allegations that he was so drunk he tried to pay for items at a grocery store with gum. Gratz was arrested last week in Miami Beach after he allegedly tried to do just that. Police say he was arrested early on a weekend morning for disorderly intoxication and trespassing. He spent the night in jail and was released. Today, Gratz would not go into the details of what happened, but he claimed he's, quote, not that dumb to try to get away with paying for something with gum. He also apologized to his teammates after being chewed out by team management. Sorry. And so Dwayne Gratz is our favorite person of the day. Next, plus size doesn't mean downsize for the fashion world. That's coming up in our corner office. Stay with us.
Mainstream news has covered all of the issues of the world, which are like this, through a very narrow lens. And at Arise News, we do things different. We cover every culture, every angle. Our mission is to go to these places, to these communities, whether they're in Africa, whether they're in Europe, Asia, the United States, the Caribbean. And we're going to find these stories, and we're going to tell them to our audience. Stories that they probably never heard of before, and stories that they'll find interesting and engaging.
Apple unveiled new products today. Did it meet expectations?
Apple stock is up 20%.
The White House says it has proper measures to contain the spread of Ebola. This seems to be, in some ways, exploding. What are officials saying?
We remain focused on working with our partners on the ground to stop the epidemic.
Enhanced measures have been put in place in Africa and the United States.
This is hitting home in a very real way, and I think, we need to be concerned.
Hello and welcome to Arise America. I'm Debbie Turner-Bell.
I believe that people are watching news less today, definitely. I think that more so people are going online to catch their news.
We've numbed the human mind to murders and all these bad things. The content is a constant loop of the same stuff. So there needs to be, new content all the time.
Arise News, every culture, every angle.
Last week on Arise, Republicans will control more states than they have since the 1920s. This is pretty much a tidal wave of republicanism. Imagine receiving a pension after just 5 years on the job. How do you get that job? Well, you get elected to Congress. You may have seen this commercial for DirecTV. A group called the Shy Bladder Group is complaining to DirecTV that the ad is offensive. DirecTV told them to take a joke. Watch this week for more Arise Xchange. In tonight's corner office, it was a market that was at one time greatly overlooked, but now the plus-size clothing industry rakes in more than $17 billion in sales annually. Our next guest helped to put plus-size fashions on the map. Monif Clarke is the CEO of Monif C Plus Sizes, a New York-based business, and welcome to Rise Exchange.
Thank
It is
you.
an honor to have you
Thanks
here.
for
This is a
having me.
terrific topic to talk about.
Yes.
I can't understand why it took so many years for this industry, this side of the industry, to really get going when you have all of these retailers out there pushing thinner and thinner and smaller clothes. So how did you get started?
Well, I was really frustrated with the market. I started because I am a plus-size woman. I couldn't find what I wanted in the market. And I said, well, somebody's got to design this. And I actually had a chance trip overseas, and I saw all the beautiful fashion in Europe, and I said, someone needs to do this for plus-size women. And so I started.
Did you speak to designers and say, look at the market here, why are you not designing for plus-size women?
Well, when I actually have a degree in math and computer science. I didn't go to fashion school formally. And so when I wanted to start my business, I would talk to people and I'd say, can you maybe take my designs and make them for me? And they would say, nobody's going to buy that. It's too sexy. It's too colorful. It's too. And so I kind of taught myself how to design, and I started.
So was there this bias, I guess, in the fashion industry that larger women did not want fashionable items, did not want to feel sexy in some way?
There's a belief that plus-size women want to lose weight before they look good, or that they feel like black is slimming, or, you know, gray is better, and that they're not reading magazines and going on vacations, which is ridiculous. 65% of American women are plus-size women.
Okay, we have one of your mannequins here. Why don't you talk a little bit about this and how years ago maybe a larger woman could not get something like this?
I mean, I remember when I was in college, you couldn't wear something like this to the club. I was kind of the dowdy one in my group, but look at this dress. It's red. You've got this sexy belt and the necklace. It's for a girl who's going out, feels confident about who she is.
Okay. You know, I want to ask you about the phrase plus size.
Yeah.
Is that an appropriate phrase? Because does it say that plus size is not normal size?
I mean, I don't get involved in the semantics. Yeah, no, I mean,
You're
I
okay
kind of
with the phrase.
I embrace plus size, I embrace fat, I embrace curvy. I mean, it's a descriptor. It's about feeling good about
Yeah, they're
yourself.
telling me in my ear we should say curvaceous.
That too. I mean, I've heard everything. You know, at the end of the day, I'm promoting a lifestyle for the confident plus size woman. We're not really concerned with what we're called.
Does the fashions change like they change with the rest of the industry? And do they mirror the rest of the industry?
Oh my gosh, plus size women are reading Elle, Glamour, In Style. They know about faux fur being in this season, or red being a power color. So they're wearing all of it. It's very much in line with the trends.
You mentioned the fashion magazines. Are the fashion magazines starting to cover this?
Definitely, more and more. And the good news is that because we are a line that really is designer focused and fashion forward, we're getting a lot of uptake in the magazines, because the editors are actually saying to us, we're having such a hard time finding clothes to put in the magazines.
And speaking of which, there is a avenue for models now, right?
Yeah. Oh yeah. Well, the thing about it is the industry is still actually a little behind when it comes to models. A lot of the plus size companies use size 8 and 10 models. We are legit strictly size 16 and 18 models. I believe customers have to see the clothes on women that have body shapes just like them.
What do you think of the controversy, so-called controversy with Old Navy, where they're charging more for plus-size clothing?
I understand the customer's frustration. Clearly, I don't know Old Navy's business structure. I know as a plus-size company, first of all, it takes more time and more energy, and therefore I would say more money to make plus-size clothing, because it's about getting the fit just right. I think that there's this misconception that if you're plus-size, you're big all over. You know, some women are busty, some women are hippie, some women have flat stomachs, some don't.
In the last minute of the interview we have left, what about men? There are plus-size men. Do they have some avenues now?
Oh, of course. I mean, I think that that's a market that still needs development, but I think that when you look at Casual Man and the different brands, they're doing some more fashion-forward things for the plus-size man.
Do you have any interest in getting into that line?
That's a market I don't understand.
Finally,
I stick to what I know.
Finally, in the last 30 seconds, where are you going to take the company? Where's next?
Well, you know what? We're growing exponentially. We're actually opening a new showroom right here in Manhattan, and it's just growing. Customers can shop at monifc.com.
Okay, Monif, thank you so much for
coming.
Thank you. This was
Thanks
fun.
for having
We'll have
me.
you back on soon.
Great.
Okay. Tomorrow on the Rise Exchange, how one company is making a big breakthrough helping to restore sight to the visually impaired. Let's take a look at the markets once again. The market started to slide basically because of the Fed's announcement, and probably because of a run-up after several days of record closes. The Dow down at one point about 40 points, finished the day down 2 and change. The S&P 500 pulling back as well. The NASDAQ off slightly too. I'm Andrew Schmertz. Thanks for watching Rise Exchange. We will see you here tomorrow. Good night.